What's up? What's up? What's up? It's Big Cheds. It's Big Cheds. Now I'm with my hat. How we doing, my friends? Set the mood. Set the mood right. I'm Big Cheds. I hope you're doing well. Thanks for hanging out. You know, this whole thing, this crypto, this trading is stressful. Let's switch it up. Let's have some fun. Let's try to get some perspective. Break yourself out of that mind frame you're in right now. Let's switch it up. We're going to do some trading wisdom, some chart analysis. We'll have a lot of fun. Show the love. Hit like, hit subscribe. I want you to know that I appreciate you. I appreciate every one of you. I try to read every comment. I try to reply to all of them, but it's getting a little big. So if I miss you, I apologize, but I see you. I appreciate you. Big chat room. Much love to everybody out there. You know, when I started, I just got wrecked, and it got wrecked for years. And once I put two and two together, started to pass on that knowledge. That's basically what this book is, but I mean, that's not really why I'm here so much. But tonight we're going to start out with, we'll do Define Your Risk. I'm going to talk about how to approach the trade. That'll be a lesson. We'll lead into some Bitcoin analysis. Find me on Twitter. I'm at Big Cheds. I do academic observations, trading psychology. That's how I like to think of what I do. My book is on Amazon, Trading Wisdom, 3 formats, and check it out. I have Audible coming soon. It's going to be great. I'm having a lot of fun doing it. Give it 2 weeks or less. Go to Crypto Banter, hit subscribe, hit that playlist, Trading Wisdom. I have a wonderful show there, 11 so far. Great group of guests, a lot of fun. Check it out. Go to my channel, Ched's Trading. If you're new, you don't know what to do, you're confused. I'm confused, right? But you know, if you're even more confused than me, go and check out my educational live streams. You've got 3 options there, 3 full hour-long, you know, think of them as TED Talks on technical analysis. I am CMT level 1, trained in Japanese candlesticks, classical charting. I take it seriously. Check out my book, of course. If you can't buy the book, you can get it for free on my YouTube channel. I'm going to do 50 lessons eventually. I've done 9 so far. Check that out. Enough of that. If you want to learn about technical analysis, if you want to take it really seriously, join Bitcoin.live. Best in class educational platform for crypto. I've been doing it for over 3 years. Hundreds of videos. Super proud of it. Unbelievable team. There's an unbelievable sale now. 3 days left. All right. You get a whole quarterly membership for $97. Take it seriously. Respect your money. Respect your money by signing up for a serious place that's going to help you out a lot. So let's get it going. Thank you for indulging me. I'm going to bring up the table of contents. I'm going to say what's up to the chat room, and I'm going to jump right in. You've been patient enough so far, so thank you for that. Andrew, why the mask? Privacy is super important to me. I enjoy doing these videos, and even though I wear a mask, I feel like there's an element of body language. You get a sense of who I am, and you know, think about it. So much of communication is nonverbal, right? It's body language. So that's why privacy is important for me, so thank you for asking that. And you're welcome. Everybody's saying thank you for what you do. Let's go on. Where's the cheesehead? Yeah, I'm looking for a good one. Let's jump right in anyway, folks. Enough of that. Let's get down to business. You're not here to waste your time. Lesson 12, define your risk. All right? The best way to avoid these situations is to properly define your risk. Define it is a quote, you know, beginning of the chapter. Do that by setting a stop loss and refusing to add to it at all. Set limits and stick with them because it's the big losers that will take you out of this game. One of the keys to surviving this game we call trading is to define your risk at every available opportunity, right? Think about that. You know, drill that into your head. So what does that mean? How is that applicable? What I'm trying to do with these brief streams, define your risk. So you come into, you know, all throughout the last, you know, how long has this been? Let's get a sense of what we're talking about. So we've been in this consolidation channel now for, let's go to daily. Let's just get a sense, right? So we're talking about the failed head and shoulders. Let's autopsy the failed head and shoulders, 16 days. And define your risk, all right? So bulls always want a head and shoulders. I mean, it's fine if it's a reversal. And that makes sense because, you know, sometimes it will reverse and you get a confirmation, you know, whether it be some type of a descending neck base or for my preference, for my money, the way I structure my trades, a horizontal confirmation, right? Whether you get that, if you don't, you invalidate, right? So you play a head and shoulders. It either breaks out. If it breaks out here, you have two theoretical trigger levels. The descending resistance. Remember, it's not so much about the actual trend line, but the trend itself, right? It's more important to show the price trend than nail the exact, candle wick. Is it here? Is it here? Like, don't get hung up on that. Focus on the essence, right, of the price action. You could execute. What am I trying to say? Why is this important? You could execute your trade on a break of the diagonal. I probably would have waited for a break of this lower high. So you either could trigger in these two places. And for me, it would have been on a recapture of that MA 200. So I'm more of a conservative trader. I like to wait and trade with comfort and kind of knowing I'm with the trend. So I might have bought there, but that didn't happen. But as the price is setting up, and we have this head and shoulders, and we have the multiple shoulders, right? Two left shoulders or a wide left. Those are two ways to describe it with classical charting. None of that matters if you just look at there's thrusts, right? Here's your initial thrust down. Here's your second thrust down, and here's your third thrust. And that's what a head and shoulders is. Okay, Japanese candlestick is called the inverted three Buddha, which is kind of funny. But anyway, what you look for is what the price is giving us. Think about this concept. You want to trade with the strategy of listening to the price. So you look for what the most obvious clues are that the price is giving you. Look for the most obvious levels, right? The resistance here is more debatable than the support level, right? Right? The support level is pretty clearly right around here, the bottom of these quote-unquote shoulders, right? 56K, high 55s. Right? That's a pretty well-established level, similar in some sense to the way the 60K level was defined, right? And why when it broke down, and every time it broke down and bounced, why we shorted this, and why we've been shorting and expecting the price to fade. Essentially, just as a little bit of a backup, maybe some of you aren't sure how we got here, why we're here, but really all of this is post-breakdown, right? You have the topping pattern, the double top, it breaks down. So all of this is just bearish retests from underneath. So as that's happening, you're thinking on lower time frames. As you're trading, you're thinking, it's probably going to reject. It's probably going to reject. And it keeps doing that. Lower high structure. All these bounces to the upper Bollinger, you expect to maybe fade them. So in any case, the trigger for that, for the bulls to regain the trend, it's a little bit debatable, right? The descending trend line or the horizontal. I would have gone with the horizontal also at 60K because as discussed in these prior videos, that's the bottom of the double top that completed. 60K is the level, right? And the price had respected it. So you faded all these bounces. You have the head and shoulders, and you have a very clearly defined support level here, right? These shoulders, the bottom of these shoulders. So define your risk. All right, what did I say? So now that I was a windbag there for a minute. Let's just quickly took notes of which chapters I wanted to. Okay, yep. So 12, right? Lesson 12, right? Page 33. Do that by setting a stop loss and refusing to add to your losing trade. So you set a stop loss. What does that matter? So if you're in here and you're long, here's the point I guess I wanted to make. If you bought these range lows and you bought with the idea that I'm buying kind of at the low part of a head and shoulders, because you don't want to buy in the middle. You never buy in the middle of the channel, right? You buy with confirmation of a break or you buy at support, right? You don't play the chop. We talk about that. So if you say you had bought down here and your stop loss had to be this right shoulder, because the way to play a head and shoulders, you either confirm or you invalidate. Right? And when you invalidate, it's a super powerful signal, right? And remember we looked at ADA had the same thing. ADA had the head and shoulders. ADA had that head and shoulders. It led to that bounce to $3, right? ADA that was setting up for the head and shoulders, shoulder, head, shoulder, and that was your trigger level here, right? Which is why you kind of went long in that retest of that level. We've discussed that, right? So that's the key level. Listening to the price. That's the price in this chart, right? You take what's the most obvious, right? Don't overcomplicate it. So for this lesson, and I have a few I want to get through, so I'll try to be more concise. You had to go short here, or you had to cut your long, right? That's your stop loss. That's you defining your risk. If you bought here and it failed, you bought here because your whole thesis, your whole trade idea is that it's a head and shoulders and it's going to hold at this level. So if it, below 56, you're thinking, oh, it's getting a little dicey, and really confirming the sweep of these prior lows, the 30th and the 1st. Like you got to respect your money. You got to pay attention when your sorry, a little close there. I was excited. When your trade idea fails, get out. Like respect it, right? So that's 12. Okay. That we'll get to the whole thing. We're going to diagnose this whole thing. All right, now we're going to go to lesson 4, low ball. So we'll talk about low ball bids. All right, we're going to the daily chart. So low ball bids. So we see the price. So let's just clean it up a little bit. You're just trying to figure out what's going on. You can clearly see the horizontal level broken. So we'll draw that. You can't avoid that. That's the elephant in the room. And then you're kind of looking at price, price moving average interaction, and and you understand like price using the 8 EMA for support, breaking down, testing the 34. So you have the primary and secondary uptrend. Then you see the moving average cross here. So you're kind of in that corrective phase. That's kind of confirming that corrective phase. So you have like right here, these from the 18th, 19th, 20th. It was 100% obvious we were in a corrective phase. You have the breach of the horizontal level, the moving average cross. So pretty much anybody who could study technical analysis would be able to tell you Bitcoin is a primary bull trend, but it's in a secondary corrective phase, a consolidative phase. So you've known that. And you're looking for clues as to the strength of the bounce in that consolidative phase, vis-a-vis price moving average interaction, EMA 34 rejections, EMA 34 rejections, and then just nasty candle action here. Look at these. There's after what the 30th, and then this day. The way this day closed, there's no way to be a bull here short term, given this candle action. Look at these long upper shadows. That's bears rejecting higher prices, and there's like really well established at this level resistance right there. Look at that. Right, you can call it a supply level. People are willing to sell it to you, right? So it's bouncing here. You're shorting, you're fading. It's all giving you all these great trades. You have to go with the trend, and the trend is down at this point. And too many people kept trying to, I called it hero long the bounces. You're hero longing like the end of the bounce. You have to understand what phase you're in. So when you're here, when you're here, it's corrective. Bears have the edge. So it's like the bulls have to do better than normal. You can't just assume, after these couple candles, like even like right here, 2 green candles, you still hadn't tested the EMA 8 yet. And you're underside MA 50. So even here, you're thinking rejection. And it did reject. You can't, there's just too much hopium in any case. So that's the point I wanted. So low ball bids, all right? So the point I wanted to make is you knew it was a bear consolidation. Bears had the edge. So you say, you know what I'd like to do? I like to set a low ball bid. I'm a terrible trader. So I want to enter as low as I can. I want to buy at a really good moment, a flash dip. Right? So I'm going to set my bid right at a logical level, right? I'm going to take that macro lower high. I'm going to take that high from September 18th, macro, the big picture, the lower high, right? The big April, May high, the drop, and then the high of the bounce, right? So you think to yourself, I understand, I've read a little bit of, classical charting, and I understand the concept of a throwback, right? Where you have a resistance level at one time established and then broken and respected, right? And then you come back. Let me do that again. Sorry, I got a little ahead of myself. So you have a resistance level established, and you come up and do all this stuff, and you come back and retest it, right? In that case, that's this level 52, 53K. We did it essentially here just a few days ago, but it's a zone. It's not one price. So it's like, the debate over 52 versus 53K is a distinction without a difference, because it's a price zone, and you understand that price, it's all about, you got to have a filter. It's not about an exact number. It's a little zone, an area around it, right? All that being said, you understand this is a logical level to buy, especially if it gets there quick. And you know that because you've traded for a while, and you understand kind of flash dips, those extreme movements outside the price, the standard deviation, those extremely volatile moves, they'll bounce back, right? So you set a low ball bid. So as the price was, even if you were a bull, let's say you were a bull, and you believed the bull case, and you were buying here, 57, you still had a bid, a limit order at 52, 52.5, 53K, just in case. Because even if you think it's 70-30 bulls, that's 30% bears. What if it breaks down? All right? Think about that. So low ball bids 4. Let's go to lesson 4. I'm having fun. Hope you guys are. I may not get to the chat room. There's just too much I want to say right now. Okay, lesson 4, wait for opportunity, page 15. I don't know who needs to hear this, but you do not have to be in a trade every second. It's okay to watch and wait for a really good opportunity. And then basically, then I raised the question, how can you do that? How do you know what opportunity is? One way is to set low ball bids ahead of time. Place these orders so low, in fact, that you do not think they have a shot at filling, right? So think about your mentality. Place it at a level where you think, man, there's no way it could go there. great, put a bid there. Because if it gets there, you'll be surprised, and it's an unusual move. It's it's likely to bounce back, right? That kind of thing, right? I love lowball bids. I love that. I either buy a throwback, a lowball bid. I mean, you're all set. Set yourself up for success, right? So place these orders so low you don't think they have a chance at filling. Then set an alert on your phone or trading software to tell you when the price gets close by and go for a walk, right? So that's the whole thing. You don't have to let the trading own you. You don't have to watch it all the time. You just diagnose the chart, understand when the trend is increasing or decreasing based on price and supply demand level interaction. Set an alert in your phone, and then you don't have to watch it all the time. Just say, all right, let me know if it goes to 55 or let me know if it goes to 58, whatever your strategy is, okay? So those are low ball bids, right? So you set a low ball bid, you saw the head and shoulders, and you were bullish, but you said, I'm smart, so I'm also going to hedge and I'll set a low ball bid. Then you're like, all right, but how do you handle that, right? I mean, what if I want to put in $3,000? Do I just do it all at once? Do I do it all at once, or how do I do it? Okay, lesson 28. Scale in and scale out, right? So let's say you bought the bottom. All right, 28 lesson, scale in and scale out, right? 71, page 71. All right, so managing your bankroll. Well, let's start out with a quote. It's a good quote. One bad trade can eliminate 10 good ones. Cut your losers early and scale in properly to your position rather than all at once. Scale in properly. What does that mean? Let's go low time frame. Let's go a little low time frame. All right. Let's just get this ready here. So we're going to go low time frame. We'll clean it up a little bit. We're looking at Bitcoin, and you can kind of see that head and shoulders, right? And you can see the key area. So as the price is churning here, you're kind of just watching this, right? And, the thing is, this is kind of the conundrum. This is the problem. Because often you get a great entry when the price will briefly break support. You come back and then boom, and that's called a spring, right? A false bear break. So you also need to pay attention for when you get the breakdown and then recapture. That's a major signal. That's a go sign. That's a great thesis to structure your trade, because your stop loss is going to be right back at that original level, and you've got momentum. So kind of, pay attention to that, all right? So we're on low time frame and scale in and scale out. So the question is, so let's say you bought the bottom. But where was it? Was it 53K? Was it, 52K? So let's say, what if you had what if your first buy was like right here, 54K, which is completely reasonable, right? Bought, these lows, plenty of justification, certainly on a lower time frame to enter there. But what if you were a little bit more thrifty? I mean, wow, it went to 52, but, let's say you set 52K, right? So those are a couple spots, right? So we'll set the table with that. Managing your bankroll properly is critical to long-term trading survival and success. One of the first things you should learn is how to scale in and scale out of your positions. What I recommend doing is taking the total amount you wish to deploy and then divide that number by 3 or 4. So I wanted to put in 3,000. We'll divide it by 3. So then it's 1,000 each. No, yeah, right. Just kidding. Yeah, 1,000 each. All right. Divide by 3. So let's say I did that, and I had my first lot here at 1,000. So I've entered here at 1,000. I'm sorry. I entered here at 54K. My first tranche, my first entry, right? $1,000. And I was brave, right? I didn't follow. Let's say I didn't follow some of the other lessons, which talk about the fact that bottoms are slow to form. Often you'll get some kind of bottoming pattern, something you can use to structure a trade, like a failed bearish continuation pattern, or like a diagonal and then a horizontal break. You'll get some type of a double bottom with a lower low or even a higher low. All these types of things can happen. So let's say you weren't following that, you just bought in, right? Take that first tranche and put it to work where you think a good entry will be, and then sit back and observe for a bit. If the price moves back up the way you expect and you receive some sort of trend-changing confirmation, then you can add to your position. So you can add, right? So let's say, what would that look like? So let's say you bought in, and we were saying, you just bought in without really waiting. You kind of just took a stab, and let's say you bought there. So you bought in there. What would that trend-changing confirmation be? Well, if the price broke back up here, and I would say especially got over that high, 52, So let's say you bought in at 54.2, that confirmation where you might add your second tranche might be up here, right? So rather than it going lower and kind of buying down here, you can buy with momentum. So that's a way, let me read it again. Take that first tranche and put it to work where you think a good entry will be. All right, so where's that? Here's your first entry. All right, you bought here, it's heading down. And then sit back and watch, right? If the price moves back up the way you expect it to, and you receive some sort of trend changing confirmation, right? Let me just turn that off. Sorry about that, folks. You get some sort of trend changing confirmation. That's your confirmation right there. Sorry, that's your confirmation, right? Breaking that lower high there, right? Because that's the big move down. That's your dead cat bounce. That's the high of the bounce. So a trend changing confirmation on this low time frame would be kind of recapturing that level, okay? Scaling in, scaling out. So what about the other way, right? What about going down? What if you bought in here? You bought in here and, it's gone lower, okay? Okay, if the price dips down further and you still think it's a good entry, then you can add to your position there as well. When you fire all of your bullets at once, you are now at the mercy of whatever happens next, and you no longer have the ability to adapt when new information comes your way, right? So that's it. Like, gotta be agile. So say it goes lower, and you're like, all right, let's say okay, you didn't get this amazing dip, but it came back up. That's a big sign, right? Why? All right, I have another lesson I want to point to, which will emphasize this point. But look at the long lower shadow on this candle. That's a great short-term bounce indicator. It doesn't mean you're going to reverse, but you have a good chance to at least bounce and test these moving averages, whether it be the 34 or maybe the 20 a little bit later in this consolidative phase. But that might say, all right, I'm going to add a little more risk. So what you might do is maybe even on this candle, as it starts to come back down and test the range of this candle, right? Japanese candlestick theory, the best entries come from the retest of reversal candles. And I talk about that in one of the chapters. I think it's 44, wait for the retest. Yeah, wait for the retest. Same thing with the concept of the throwback. So as you establish the candle, that tells you to start watching and observing. Then when you get the opportunity to look at the price testing that range, maybe you add more there. So let's say you were a little bit aggressive, started to add down here, okay? Now you have your first entry there, your second entry there. So that's fine. That's scaling in and scaling out. That's the point I want to make. Last point I want to make, and then I'll go to the chat room, see how everybody's doing, is volume, the lesson in volume. I tweeted that out. And the reason I tweeted that out is you look for volume in these short-term bottoming situations. I guess you could just check let's do it this way. There we go. And I don't know what that was all about. All right, lesson in volume basics, lesson 33, okay? All right, appreciate you bearing with me. Folks, thank you for watching as well. Please hit like, please hit subscribe. I'm going to page 80. So, talking about Bitcoin, we're talking about so there you go. So it's lesson 33. And there we go. So it's going to be lesson 33. We're talking about volumes. Why does that matter? Look at this volume, right? So why is that why does that catch your attention? Volume basics. Volume is one of the most misunderstood concepts in all of trading. The most volume typically comes at the top and the bottom of a chart, or at the start and the end of a trend. As discussed earlier, once the trend in force meets resistance, a volume-filled battle ensues and the new trend takes over. Like, volume is what you want. If you're looking for a reversal here, if you want bulls to step in, this is okay. This is okay, but it's building bear volume, building, boom, climax. You need a climax. You need a washout. So you see the volume, and you see this long lower shadow. You're feeling pretty good. You entered here. You've scaled into your position, and that's that kind of concept in motion. I don't know if the bottom's in. We'll have to see how it plays out. I'm going to do another update Sunday night for Bitcoin.live, and by then we'll have a little bit more information. Of course, but we're really just going to remain focused on the structure, the lower high, the weekly MA50, the daily MA200, stuff like that. JAS, you can buy the book on Amazon. Thank you for asking. Let me just review the chat room. I went on a little bit of a rant. So Supreme Smithy, I'm learning a lot. Awesome. I love it. Like, trust me, it's a circle. People help me out. I've learned so much. Take advantage, and I love hearing that feedback. This is why I do it, so thank you. Let's see, what is going on? All right, everybody, that's kind of where we're at. That was a whole thing. You know what? Let's wrap it up there. Let's just wrap it up there. That was excellent. So listen, I hope everyone's doing well. Trading's hard. Like, define your risk, right? What does that mean? Trade with less. You know, don't risk a lot of money unless you're confident. And ideally, don't risk any money unless you're confident, right? If you're just starting, unless you're profitable, you got to start risking less because it's experience. It's like imagine trying to become a good poker player and only playing a little bit and only having played maybe, 100 hands in your whole life or 1,000 hands. You need 100,000 hands. Okay. Like whatever your experience level is, you need, 5 or 6 times it, or maybe 20, 20 or 30, depending on who you are and what you've done. So to survive that process, you have to risk less, whether it means paper trading and literally risking nothing, or just scaling in and defining your stop loss. Like if you enter, let me get a couple things out of the way that are important. So focus on strength, play strong charts. I made this point last video, where I said between like Sol and LTC, they were the same price, right? Play the stronger chart. Sol is an uptrend. Plenty of moving average support, rising MA 200, higher highs, higher lows. And then LTC had a bounce, earlier in the year to, last year to early this year, and it hasn't done anything since May. It's below the May highs. Moving averages are rolling over. It's getting ready to confirm a downtrend. Play strength. When the whole market's shaking down and it maybe is starting to bounce, go play the stuff that's been strongest, right? Like Sol, like Matic, for example, like Luna. There's strong stuff out there. Play the strong things, okay? So that's the first thing. Play a strong chart. Number 2, risk a little bit. Okay, don't risk too much. Number 3, use a journal. Write down why you entered. And most importantly, 4, when is the idea going to fail? How are you going to know that your whole plan has failed? Because when it's failed, move on. Because then you want to have a chance to try it again. You want to give yourself a chance to try again later. And if you're all messed up in the head and you're emotionally compromised, just walk away. Go play chess. Go for a swim. Go watch a movie. Do something. Walk away. You got to manage yourself. If you do all those things I just said, you'll be a lot better. I want to thank you for your support. I really thank you, folks. I love doing this. There's 700 people. That's awesome. We've been growing fast, and I appreciate all your support. Of course, I'm on Twitter at Big Cheds. Let's get this party started here real quick. Hold on. Let's get this party started. All right, I'm on Twitter. I'm Big Cheds. I'm grooving with you tonight. 12/3/2021. Check out the free playlist of videos at Crypto Banter. Hit subscribe. Go to Trading Wisdom. 11 great episodes so far. Check out all my stuff. If you're new, you want to know, how do I do that TA? How do I get started? What's a moving average? Why do you use those moving averages? Watch my masterclass webinars. These are amazing. 3 long series webinars. And if you want to get serious about learning how to trade, check out Bitcoin.live, best in class educational platform for crypto. I've been doing this for over 3 years. I'm a founding analyst. You get my heart every time. Twice a week, 2 long form updates. We have an unbelievable sale right now. Barely over 3 days left. You'll be kicking yourself if you don't try this out. I'm telling you, I'm part of a great team. You get access to everyone's content, not just mine. Look at that, $97, 3 months access. What more can you ask for? The book's on Amazon. Thank you for indulging me and letting me talk about it. I think these lessons are great. I got wrecked and I kind of learned some things, and this is where the book came from, folks. Kindle, hardcover and paperback and Audible version. You asked, I listened. I'm working hard on it. I'm hoarse, my voice. I can't even talk because I've been re-recording each lesson. I'm trying to get it right. So it'll be out in a couple weeks. Super, super excited for that. Bitcoin, what a life. It's fun. So anyway, thank you very much, folks. I hope you're doing well. I know some of you stayed up late to listen, and I appreciate that, and I definitely won't forget it. So until next time, Big Cheds out.